Have you guys ever heard the term that good news is bad news? Why am I saying that? Well, because the U.S. economy grew at a slower pace. 2.4% was expected GDP. We grew at 2.1% as the figures came out today. Jolt's job openings came out yesterday showing that we have less job openings and the labor market is cooling. So all of that has really caused the market over the last couple of days to moon. But where are we going from here as the S&P 500 has hit a pivotal 4,500 psychological level? Well, I want you to take a look at a couple of things here. It's important to note that we are still in a bull market. We shifted from bear to bull market, meaning that we've had a 20% advance from the bottom. Now, when this happens, we've never ever gone back to a bear market 12 months later, except for once in 2001. And this is data that has held since 1949. So going from a bear to a bull market is a very significant event in the US stock market. And I want you to notice one more thing. The recession overlap here. A lot of these months actually overlapped recessions. There is this conflation that retail investors make between recessions and bear markets. They are not the same thing. You can be in a recession and not be in a bear market. As a matter of fact, as you can see here, most of the time that we've shifted from bear market to bull market, those have actually overlapped recession months. So it's important to not conflate those two things. Now, secondly, in terms of where we go from here, look at the Nasdaq. The Nasdaq has had an average positive gain every single month going back to 1971, except for September. September is the only red month on average for the Nasdaq. For the S&P 500, we have February, August, and September going back to 1945, that average red month. So September being the worst of them at negative 0.73% average loss in September. So September is terrible for both the Nasdaq and the S&P 500 historically. Now that would line up with our thesis. If you're a fan of this channel, you know that I've been saying that I expected a 5 to 10% pullback in the summer leading into potentially September. And we got a 5% drop in August. And we are now forming, and I'm going to draw this really quickly and probably very shittily, but we are now forming a head and shoulders here that everybody and their mom and their cat can actually see. This is a head and shoulders at the top of a rally, which you don't want to see a head and shoulders as a potential reversal signal, because those are when those patterns tend to be the strongest. So if you look at the month of August, we're actually in a red month. This is the worst month this year since February 2023 when we dropped 2.6%. We are down now 1.6% in August. And it seems like we've had a green month. But like I said, because most of the month of August we've spent going down into that 5.5% correction, even though we've had gains during the last couple of weeks of August, the losses have still outweighed the gains. So we are actually at a net negative, and unless there's a miracle come tomorrow, as of the time of this recording on August 31st, we will likely end the month red. And I suspect that we could end September slightly red as well. As you can see here, we have a monthly fair value gap that could still be in play come September. And I've said this time and time again through my analysis that the market rarely gets back to recent highs before suffering a drop. You could see this back in 2020, twice actually back in 2020 before hitting recent highs. We actually do suffer about a 6 to 8% drop. This also happened in 2019. This also happened in 2015. So it is very common to for this not to see the recent highs again before suffering more of a drop. Now, I don't expect us to get back into a bear market, and we could very well not drop anymore. That drop in August could be the bottom of that pullback. However, I would need confirmation that this head and shoulders is invalidated. Plus, we're at a very pivotal psychological 4,500 level. Now, if we do drop, as I said before, I would very much welcome a drop to the golden pocket of this recent rally around the 4,200 to 4,300 level on the S&P 500. I would absolutely relish that opportunity, but I'm also not waiting for it. So in terms of how we're positioning ourselves for stocks, for mega cap stocks, we've been actually selling puts, and this has been working wonders on stocks like Tesla. And I've been posting about this on my Twitter and Instagram. Follow me on Twitter and Instagram for free daily trading and finance content. Link is in the description. as well as obviously in the academy where I send out my official trades. We are now up 4,400 on this position in Tesla, selling puts, selling the 245 puts, the 220 puts. I have an array of puts that I've been selling. Now, the reason that put selling works so well, and I went over this in the free mastermind that I did. If you missed it, I gave you guys ample opportunity to sign up. It was last week, absolutely free. We had 1,500 people sign up. But I was saying that in a bull market, you want to be selling puts because you want to have the opportunity to buy your stocks at a discount, but you also want to get paid for that opportunity. So when Tesla hits a low price, which we basically measured by taking the 50% retracement of the previous rally, when Tesla hits these prices, then I'm very eager to sell puts on Tesla. And if I get assigned, the worst case scenario is I get assigned at a much cheaper discount on those puts. My average assignment would be around 205 to 209 on Tesla. And if Tesla does not hit those strike prices, I get to keep that entire amount. As you can see here, I can close this now and bank almost $5,000 on this Tesla trade. It is literally free money. Learn how to make the market work for you and pay you on a daily basis by option selling strategies. If you want to learn how to do that, check out the link down below. Put in the code monthly for a chance to get the membership forever at less than $4 a day. And we are also launching Mastermind 2.0, where we go over an entire month's curriculum on technical analysis, futures trading, options trading, and how to enter A+ trades. My exact strategy taught to you in a class taught by me live. We are launching that at the end of September. You definitely want to get your name on the wait list. So you will also find that link in the description. So that is how we are positioning ourselves, is that we are selling cash secure puts on stocks that we want to own. I also did put out a bolo for buying the Nasdaq, but I would not be surprised to see September slightly red and then rally to all-time highs by the end of the year. That is my prediction. Unless we get, obviously, a credit event, which we cannot forecast, and it's a moot point to try and forecast. Also, we did buy a while back some Occidental Petroleum. So I'm not generally a stock picker, but there are some stocks that I like. Otherwise, I do just buy the indices and the mega caps, right? And lastly, you'll see here is the monthly performance for the S&P 500 as September, going back to 1928, has really been the worst month for the S&P 500 as well. So not just the Nasdaq. So I would be very cautious about adding heavily before September. But on September, if we do get a drop, especially to around the 4,300 level on the S&P 500, and this head and shoulders is confirmed, I would definitely welcome it. Now, this head and shoulders would be, if this head and shoulders is confirmed, you can see the neckline here. We would likely end up at that level. So that to me would be the best case scenario from an investing standpoint, from a buying the dip standpoint. Again, barring a black swan or credit event. But I do think we will be at all-time highs before the end of the year. So, and lastly, somebody check on your boy Michael Burry. He's down bad. I mean, he opened those shorts in June. So there was a huge rally in June leading up to July. And then the market dropped to the same price that it was in June. So he'd still be down on those puts. And then now we see a market rally. And I don't know if he closed them or not. We won't know until the next 13F filing. But as I said, that the Michael Burry short was just a load of hoopla. It was nothing to be worried about. Even if he was right on the short, the amount of the short wasn't that crazy compared to the average volume that we see on hedges and puts in the market. Anyway, traders, that is it for this video. If you got something out of this, leave it a big fat thumbs up. Leave it in the comment section below. Let me know what you think is going to happen in September, or what you think is going to happen in the midterm. Are you positioned short? Are you positioned long? Are you in cash? I'd love to hear from you. I try to respond to each and every single comment. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.